Hi everyone, in this video I will explain why the probabilities from an Elliott Wave point of view on Ethereum are higher than the low is in, and we are looking for higher prices to come. I will analyze the weekly time frame as well as the daily time frame in this video so that you know exactly what we're looking for and how probabilities may change. The previous update that I posted on Ethereum was on the 2nd of April, and price was at that moment ranging around 1800 to 2000. We were locally still looking for lower prices to move into the other areas of support and observe the reaction. But in general, you can see as per the polylines that we were looking for a bounce in those areas and for price to move towards the upside. Now it is the 19th of May. Price indeed moved towards the downside from this range into the support, touched the 0.618 in this WXY scenario, which is a common target for a wave Y as well, and moved towards the upside, currently ranging at around 2.4K. Now let's then look at this scenario in a bit more detail. Price here touched the 886. Now the 886 is taken from the high to the low, labeled here as wave W. And the 886 is important because the moment the 886 is touched, the probabilities increase that whatever is forming over here is a corrective structure, which gives you a directional Elliott wave bias towards the upside. You're still looking for price to sooner or later take out the all-time high. Now the scenario here on my chart is a sideways double combo. It's a WXY structure with a zigzag in wave W, a double zigzag in a wave X, and then a flat structure ABC in a wave Y. After a WXY structure, you would look for price to move towards the upside. Now, as mentioned already, the 618 is a common target for Y, but for the ones that are interested, it is taken with the trend-based sub-extension from the start to the end of W to the end of your wave X. An alternative scenario is what you see here on my chart, which would basically mean that price would range sideways for a longer period of time, but you still expect price to take out the highs at about 4.1K first. So this again is a WXY. We have a wave W, but we have a longer wave X labeled then as a WXY, but an additional X and then a wave Z. Now, a WXYXZ is a very rare structure. You do not often see that at all, so that is why it is an alternative, but we are at least aware of it. Now, inside wave Y, we're then looking for either a flat structure, A, B, and then a wave C, but most commonly you would take out this high anyway at 4.1K, or you're looking for a triangle A, B, C, D, E, which is a continuation of the range, and then afterwards you're looking for price to move up to again take out this particular high. It is quite clear that the first structure to the downside from the all-time high is best counted as a three-wave structure, so therefore on the very high time frames, bullish scenarios remain a higher probability. If we then go to the daily time frame, then on the daily time frame, we zoom into the local move towards the upside, which we currently count as a 1, 2, 1, 2, 3, 4, 5, look for a 4 and another 5, with potentially another 4, 5 afterwards. When this is finished, you might get another range and another push for a final 4, 5. But in general, you're looking for an end of an impulsive structure. And at the moment, it's labeled as 1, 2, 3, 4, 5. Common target for your wave 4 is the 0.236 to the 0.5. Taken from the low of 2 to the high of 3, 2.4K, 2K. Invalidation is 1.9K. You can see that price also here touched the 0.236, so the minimum target therefore has been reached, which is nice to see. After a wave 4 though, you do expect price to move towards the upside. You'd still be looking for a wave 5, which internally should be a nice 5-wave impulsive structure. And after 5 waves, you expect another range / a retracement to the downside. Now this impulse to the upside is then best counted as a subwave wave 1 or wave A. So after wave 1 or A, you look for a range or retracement and then another leg towards the upside in either a wave 3, which would be very bullish, or a wave C. Now, when we look at some of the levels of resistance, then these areas are currently my main areas of resistance. So the monthly naked point of control has been touched. That is where we are at the moment. And then to the upside, we have at 3K, the weekly naked point of control, then another monthly naked point of control at 3.3, and then here a weekly naked point of control at about 3.6, 3.7K. If I then also put the time frame horizontals on my chart, these are not as much of a priority than the volume levels. So again, these are my main areas that I like to keep an eye on. And then additionally, we have these ones here on the chart. Just like to show my levels so that you might want to put them on your chart, right? So this is also, these type of levels is in the end what creates my target boxes as well. And in this area, we also had a couple of confluences. So yeah, it's always interesting to keep an eye on those horizontal areas. On the daily time frame, this is the highest probability Elliott Wave scenario. But if price would move to the downside, it is very important to be aware of some alternatives, starting with counting this as a wave 1, 2, 3, 4, and then an extended fifth wave to the upside. It is very rare to have an extended fifth wave structure, hence the reason it doesn't have the highest probabilities. Your wave 3 over here is longer than your wave 1, which is important because wave 3 is not allowed to be the shortest in an impulsive structure, and your wave 1 and 4 do not overlap. Now, this 5-wave impulse would then be counted as your wave 1 or A. You look for a corrective 3-wave structure to the downside and then a wave 2 or B, and then a continuation to the upside afterwards. Alternatively, if price would fall, you would have to count this as some sort of a zigzag or double zigzag structure, but that means you immediately have to think about diagonals, either a bullish diagonal being a 1, 2, 3, 4, 5, look for a retracement and continuation, or alternatively, a bearish diagonal, which would be this one here. And then the WXY, and then inside wave Y, your C becomes a diagonal. 1, 2, 3, 4, and then a wave 5. Look for price to move towards the upside, and preferably your wave 5 then ends on top of this blue support between 1100 and 1200. Now, it is very difficult at the moment to give diagonals the highest probability. It is way too early to speak really about diagonals, or at least consider them as high probability scenarios, but it is something we have to at least be aware of. Hence, I presented in this video, as I don't update Ethereum very frequently compared to, for example, Bitcoin here on the channel. Now, if we then look at the news, then we also have some news this week on Thursday, May 22nd, some high impact news. And you can see here all the news till Friday, June 6th. So make sure you trade safe. All the times are Central European time zone. It can increase the volatility on the chart. And if we then look at the probabilities of the different scenarios, then on the weekly time frame, which is where I'm at right now, the probabilities at the moment are highest for a finished WXY, which is the scenario you see here on my chart. And then on the daily, we preferably like to see here a 5-wave impulse, 1, 2, 1, 2, 3, 4, 5, 4, 5. An extended wave 3 is always the highest probability impulsive structure, so that is the preferred scenario. And then you look for price after an impulse, preferably a wave 1/A, of course. You look for 2 or B, and then continuation to the upside. On the number 2 spot, we have an unfinished WXY. Lower probabilities at the moment. WXX is then WXYXZ, very, very rare. And then your wave Y would create a bigger range, either a triangle, so that basically means range sideways and then up afterwards, or a flat ABC, but most commonly B takes out the high of the origin of A, which basically means take out 4K anyway. Then on the daily, a finished 3-waver here, or a impulse 1, 2, 3, 4, 5 when an extended 5th wave is more rare than counting a extended wave 3. So hence the reason why the probabilities locally on a daily time frame are at the moment highest for this Elliott Wave structure, where we still look for price to move towards the upside instead of having a finished structure here, which then generally means that the Elliott Wave probabilities would suggest that locally we'd look for more upside to finish an impulse followed by a retracement. And on a weekly time frame, we would currently give highest Elliott Wave probabilities to a low being in and the 4K high to be taken, and then we take it towards the upside and see what comes next, right? Take the all-time high eventually and look for 5, 10, and who knows how far price likes to go. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting, and on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.